Good morning, everybody. Thanks for joining me. A little bit slow today, late night, last night, big game. Anyway, all right, let's get to make this kind of brief. Not a lot to go over. We'll go over a couple trades from yesterday, what the number one group is that we're focusing on now that you will not believe I am going to say. But I'm going to say it. I'm going to say it. So we'll talk about big picture macro, what has to happen to turn the risk monitor some color other than red. And then, how we traded yesterday and what stocks are at the top of our whiteboard if we were to start making investments. So let's dive right in. Don't forget, this is a virtual hedge fund experience. That means you're the portfolio manager of your own assets. You're the risk manager of your own assets. So take all the information you hear, whatever you hear from me and other sources around you, and then be the smart money on your own. Follow your own strategy and execute it. All right. Okay. First things first, yesterday felt like a rally day, right? I mean, it seemed like a rally day. I know we were making money on the desk on the ARMR carry trade, long triple the S&P and triple the NASDAQ. But in reality, there was only one index up yesterday. So let's take a quick look here. I came in this morning thinking, boy, it was an up day yesterday. But the equally weighted was down yesterday, S&P. And the weighted S&P was down yesterday. So it didn't look like a very good day yesterday. And of course, so what was it again? It's the Magnificent Seven. It's the Magnificent Seven. Those are the stocks, the only stocks holding up the market all year. You strip those stocks out of indexes, and all the indexes are down for the year. You go look at the small cap index plummeted yesterday to literally take out the lows of whatever meager rally this was all the way back to last October. So about to hit new 1-year lows on the small cap index. So that's what's going on. The big picture, the market looks terrible. Having said that, we have earnings announcements this week, so this is going to be an interesting week. You got Microsoft, you got Google, we've got Amazon, we got Meta. All right, so here it comes. I mean, can Meta break out of that little cup and handle base? It looks great. We already had Tesla get past us as a disaster. That was a disaster, but that's behind us now. And in the meantime, Netflix, had the gap up. So, which is like the 8th of the Magnificent Seven. Like, that's the little guy on the mule in the back, But anyway, so, what can I say? What I want to say to you this morning is, in any market correction, you can get a rally for a couple days. The biggest 2-day rallies happen in bear markets historically. The biggest 2-day rallies happen in bear markets. So it's just important to remember, and I put up on the screen here, treasuries. It's definitely, treasuries are leading everything that's going on right now. And if treasuries can rally off the low, I suspect the market will bounce off of its low. So we're in a significant downtrend. We're near the bottom of the trend. So now's not a time to be short, not a time to have short positions on indexes. It's a time to look to capture rally opportunities. But in order for the risk monitor to change, it takes more than a couple days of a rally, right? Quite frankly, that's one. I didn't write the algo for that reason, but when we're forced to look at 10 indexes and use algos on 10 indexes and look for confluence, it helps us get past the 2-day wiggle, because that almost never happens in 2 days. Like, it takes more time for the algos to all set up. So you'll get a 2-day rally in some of the big indexes, and then maybe the following week you get the other indexes confirming, and now all of a sudden you've got a risk monitor that's not red anymore. But it takes more than 2 days. And then I added for you thoughts from the Investors Business Daily, which is the William O'Neill style of investing. And what they said yesterday was the NASDAQ 100 had a rally day large enough to potentially start a new rally. Now, this is just how they calculate stuff. So no other index did it, but they say that the NASDAQ had, because of the reversal, that could start the rally. But in order to confirm that, they don't count any action until day 4. So yesterday was the rally attempt. Today, Tuesday, Wednesday, Thursday, they don't count. And if on Friday there's follow through, then they'll say, hey, their risk monitor will change to something more bullish, which is interesting. They don't look for confluence. So if just one big index does it, IBD starts putting money to work. All right. So these two different strategies, I kind of dovetail and work well together. I'm looking for the IBD to turn. It usually turns first. Then we get a risk monitor that goes green, and now we know we've got something. So what's at the top of my whiteboard? How do I put money to work? This is the ARMR investing way. When we're going through a correction and we exited the market near the top and the market's going down now, what we look for are some of these follow through IBD, ARMR, algos, giving us a risk on entry. And the first thing we do is we get long the indexes. So the top of my whiteboard, I don't need to do a lot of research right now. I don't want to do a lot of research right now. I don't want to get excited about a lot of ideas. Okay. Because I'm not buying those. I don't care about those ideas. And there'll be a whole new batch coming out at the right time. Okay. So the first thing I'm going to do is I'm going to own double the indexes. The index algos go green. I get long the indexes. I capture market rates of return. So I'm going to set up my portfolio so I'm getting 100%, the NASDAQ and the S&P, maybe the Dow, maybe the small caps. We'll have to see at the time. Exposure to the market using double ETFs. So it's kind of easy. I could put 50% of my capital, for instance, in double the ETFs. I'm going to have 100% market exposure. I'm going to have 50% of my capital left over to earn the right to start buying individual stocks. If the indexes start making me money, now I've got a cushion. I've earned the right. I start doing all the work that you and I've been doing over the years together, finding what are the top shelf stocks I want to buy. And then I start putting stocks in the portfolio to try to capture more alpha. I put stocks in the portfolio that I think can do better than twice the index. That's the benchmark. If I can't do better than twice the index, I don't want the stock. I'd rather more 2x ETFs. So that's the progression. Normally it'll happen. We'll get the Qs and the S&P algo giving us the risk on. So we'll get long those ideas. And then if we get follow through from other indexes, the risk monitor goes green. We'll add other indexes to get all of our exposure. We start making money on that. Now we can start putting capital to work in individual stocks. So top of my whiteboard, all the double index ETFs, because that's my focus right now. Okay. The ARMR carry trade. I'm having so much fun with it. I hope you guys are too. That's where most of my capital is dedicated right now. It really suits me. And the more money I make with it on a risk adjusted basis, it's not about, owning a stock that goes up huge on a given day. It's about a long-term strategy, day after day after day of executing the playbook, capturing alpha when we can, stacking chips on top of the interest we're earning. I'm in love with that trade because it keeps working and I keep collecting interest. And I'm using capital that the brokerage firm's giving me for free because I don't pay margin interest. I'm just in love with this trade. And this is an example of what we did yesterday. So I'll just pull it up for you real quick. Whoops. Here, take a look at that right here. Okay, this is the ARMR carry trade right here. So what I love, first of all, is the market gap down Monday morning. So I have no position on except for treasury bills, right? So I don't care. Market gap down. Great. I could start reading and reacting and looking for entry points on a gap down. That's how we're going to capture alpha. Market was down yesterday. The ARMR carry portfolio is up over 0.6%. That's just stacking chips with the market down. That's capturing alpha. So I love gap down on Mondays. I shared that idea, that thought with you in the Slack room. I said gap down Mondays are usually buying opportunities, and that's exactly what it was. This is a play right out of the playbook. And I'm building the playbook for you so you can, ARMR Insiders, I'll send it to you when I have it. But between now and then, if you don't want to wait, you could just cut and paste these. I share them with you in the education section of the Slack room. This is just a classic. You could cut, paste, and print it out and staple it above your desk. Tape it or whatever you got to do to put it above your desk if you're trading with me, because this is a classic setup. It's one of my favorites. And it's why at this moment, I'm putting on my biggest position size. So I'm going to capture 300% exposure to the market. It's going to gap down, reverse. The white box is lock and load. The green box is the buy trigger. I'm going to put on 300% exposure to the market, and we're going to manage that trade all the way up to here where we finally get out on that yellow box. That's the armor carry right there. And I'm done on the day. Whole portfolio is up over 0.6% back. I give the cash back because that's borrowed money from the bank. I mean, from the brokerage firm, right? And great. I get to keep the profits, and and I'm collecting the interest while I'm doing it. I have no overnight risk. And I don't care that the market went up a little bit more. That's not the point. There's a specific stop strategy we use. When we get stopped out, we're done trading on the day. The whole thing happened in the first 2 hours, and it's over. And let me tell you something else. The highest probability trades for us happen in the first couple hours of the day. Every now and then we get a PM trade, and it's in the playbook. There's PM trades in the playbook. If it sets up like this, I'll trade in the afternoon. But those trades, that while they work at a lower probability. They're not as high as probability as these trades, but they work at a significant rate. So we still trade in the afternoon. But yesterday is just literally a classic trade out of the playbook. So I don't know what we're going to have today. Today, the market's gapping up. Who knows? Could be a gap and go day. Great. Market gaps up, trades tight for 15 minutes, breaks out above the opening range high. I'm going to be long if that's the case. That'll be a classic gap and go setup. Who knows? Who knows? Anyway, okay. And then just to wrap up this conversation, let's swing over. I can't believe I'm going to share this with you. I told everybody in the Slack room yesterday, shh, don't tell anybody. I can't believe I'm doing this. Right? But there it is. Okay. There's a chart of MicroStrategy. And I just couldn't help myself. That is such an unbelievable chart pattern to me. The lock and load. Yesterday was the green box day. This right here is a 3-minute chart, so you can see where we were buying it. It was a charmer trade. Okay. And this was early in the morning. It went a lot higher than that, right? And then this morning, it's looking to gap up another 9%. So why don't I share with you how that trade ended? But that's what I popped into the room. And I said to you, I can't believe I'm doing this. We had a nice conversation. I want to thank everybody in the Slack room that was chatting with me. We were kind of doing research together, trying to discuss the opportunity and discuss what was going on in Bitcoin. So I want to give a shout out to all the ARMR insiders that were in the room. This is a virtual hedge fund, and I asked you guys for help. I said, help me understand what's going on in Bitcoin. And you guys were right there with it. So I really appreciate all that. And for me, I settled on the fact that, number one, MicroStrategy's got the best looking chart pattern to me. So I'm going to buy that stock. I couldn't help it. I got to buy the stock. And number two, I even had a mental block. I'm like, I can't even remember the CEO's name. What's his name? Michael Saylor. I think it's like literally a mental block. I've been, out on, the Twitter sphere and YouTube over the last X amount of years, sharing with you how I think the guy's a crackpot and I can't stand him. And I would never want to, I don't know, I think he's crazy and all these kinds of things. Okay. This is not a mea culpa. I still think he's crazy. But I'm going to make money with a crazy man. That's just the way it is. Maybe he's an idiot savant. Maybe he's just like one of those types of people that he's just got that. I mean, the guy has been borrowing money and buying Bitcoin with a price somewhere in the low 20,000s, I think, right? Last time I checked. And Bitcoin goes up. I mean, there's tons of short interest in the stock. I mean, this stock could go berserk to the upside if Bitcoin goes up. I mean, so Bitcoin's up another 10% this morning. Is that right? And MicroStrategy up about 9% right now. And of course, you can own the miners, Mara, Riot, all these things. But I'm going to go, first of all, with the best looking chart pattern. So that, to me, MicroStrategy above all the key moving averages is what really forced me to look at it versus Mara, which I know is up more this morning. But you see that the miners are below all the key moving averages. And I want to go with the leader if I'm going to do this. Okay. There's Mara, there's Riot, and they're going to gap up above the moving averages today. So that's great. But I would rather stick with the leaders. The only other stock that I would add to the portfolio is going to be Coinbase, but I wouldn't add it yesterday. Some of you did. I think Brian T. I'll shout out to Brian. Well done, brother. You captured things up about 8% this morning. But for me, yesterday is the lock and load on Coinbase, right at this tight moving averages. And if it closes in the green, I'll own Coinbase today also. So a lot of this has to do with the release of the new ETFs and all that kind of stuff. So obviously there's risk in there if things don't go the way people think. But it seems to be rolling downhill. And I know the Silver Fox has been on, what is it? Grayscale, GBTC. Okay, he's been on Grayscale as this trust is getting close to being turned into an ETF, right? And so there's a massive amount of discount to the net asset value of what they hold. And so this thing is starting to skyrocket too. It's probably a great idea. BITO is, gapping up this morning, 10%. So Bitcoin's waking up. The way I want to play it is MicroStrategy and Coinbase. Coinbase is going to custody the BlackRock ETF. So to me, that if they're going to be doing that kind of custody business, it totally takes off the concerns fundamentally that Coinbase is not going to be a going concern. If BlackRock is content to work with Coinbase, then I'm content to invest in Coinbase. Not to mention those are my two favorite chart patterns in the group. So why would I buy crypto when I won't buy any other stocks? Well, I own gold and silver and oil, and I think crypto and Bitcoin, particularly not crypto but Bitcoin, fits in there somewhere. These are the assets that look the best. I don't know why, and I'm not going to argue with it. So here on the desk, I preach read and react. I talk about not having, a bias, just executing what you see. And so I am practicing what I preach. If I can buy MicroStrategy and make money, you can buy anything. Because I don't know, a year ago, I haven't thought about MicroStrategy in a long time. If anything, I've been short this year a little bit. But, remember we talked about the puts and whatnot. On and off. I'm not short now, but I'm just saying. I haven't thought long MicroStrategy probably forever, ever. But that pattern looks so good. I said, all right, I'm not going to argue with it. Let's get some money to work. And now it's up another, 8.5%. So anyway, those are my thoughts for this morning. I hope you found them helpful. Take all the information you hear and be the smart money. Execute your own strategy. I'll see all of you on the live desk at 9:30, and we'll look for the next ARMR carry trade. All right. Have a great day, everybody.